Good morning. Welcome to Market Day Report. All right, we're still a little over 10 minutes away from opening up this day session, but what about the overnight session? Where did we trade? Let's go to the markets, and we'll start with corn. And the new crop unchanged at 417 in front of tomorrow's WASDE report from USDA. For beans, 6.5 higher in the overnight session, 1031 3/4. Wheat market, Chicago down 2 3/4. Kansas City down 3.5. Brian Hoops, President, Midwest Market Solutions. Brian, what are you watching?
Hey, good morning, Tony. Well, first of all, it's 9/11, Remembrance Day 24 years ago. So I, certainly remember sitting at a chair and a desk in the markets trading when all this went down. And, it's a day that you never forget. Markets were closed for several days after the tragic events. Export sales out this morning, I think best word to say is they're uninspiring, especially for the wheat market. We were hoping to see better wheat business. I think traders are going to be disappointed as well because you're at these contract low levels, just hovering just above them in the case of wheat, and their sales were only 11 million bushels, just over 11 million bushels last week. So I'm pretty disappointed with that number. Corn and soybeans, it's the first official week to this new marketing season. They weren't that great either. Now we're off to a good start for our corn sales with everything that we've done over the last several weeks, but they were only at 21 million bushels this morning for corn. Soybeans about 20, so not a bad number there, but probably not enough to really give us any type of direction. So now we go back to harvest data that's starting to trickle in. Weather's important as far as harvesting goes and making sure we don't have like an early frost or something like that, but it's taking kind of a back seat towards harvest numbers. Then, of course, on Friday morning, you have USDA data. They will update their production numbers. Now, the trade guess is for a reduction in corn bushels per acre, about 2.5. Soybeans, a very small reduction. We think with the dryness that we saw during the month of August, that we are going to see a yield drag here in both corn and in soybeans, and that will tighten up our balance sheets just a little bit. Corn, maybe 100 million bushels, soybeans, something closer to 5 to 20 million, probably not much of a major change for the soybeans in tomorrow's report.
We always talk China when we talk trade. Actually found China again in row crops here. This will be in cotton. They purchased 17,600 running bales of upland cotton, according to USDA's export sales report. And again, also taking some exports too. So actually getting it delivered, only 700 running bales, but China in the market, so they're not completely out. They're just very limited. Is that encouraging, though?
So in the case of cotton, they don't have a lot of other countries to turn to other than the United States. There's not that many countries that grow that cotton. You look at where can they buy soybeans from? Well, they have a monster crop out of South America, both Brazil and Argentina this year. Big corn crops out of Brazil, record large there. They can buy corn and soybeans from other countries. And in the case of wheat, we have production increases in Russia, in Argentina, in Australia, Ukraine. All these countries are going to increase their production compared to last year. It really puts wheat in a tough spot. And as we talked yesterday afternoon on your commodity wrap program, there's just not much incentive for a farmer to plant winter wheat this year. There's certainly not much of a carry as we're struggling at these levels. It's market signaling not to plant a lot more wheat because we can't export what we grow currently.
Yep, good point there. Okay, Brian, hang on. Quick break. We're back in a moment. We'll talk livestock futures. Market Day Report continues in a moment. Okay, let's talk live cattle futures. We had a big sell-off on Tuesday, but then Wednesday, look what happened. The market kind of recovering a bit. October up $1.10, 231.27, and the December at 232.75 was $1.57 higher. Then we go to feeders and mixed trade. Now September and October settling higher, but November through March extending the losses. And you look at like the January and the March contract. Well, the March contract was off over $10 in 2 sessions. The limit moved lower on Tuesday and then the lower move yesterday. So we'll continue to watch, see what happens in the cattle market. Hogs, kind of the same story. October, December higher, February through May lower. Brian Hoops, Midwest Market Solutions, kind of ended there on I'll spit it out in a minute. Cotton and China. China back in the market, though, for U.S. pork and a pretty sizable purchase from China. So that's got to be a little encouraging as well.
Yeah, exactly. They do have a need to buy pork, and they have a need to buy it from the United States. Again, not a lot of other countries that can fulfill their needs. So they are coming to the US when they have to. But if they don't have to buy something, they really do not want to buy from the United States. So, but they are buying pork. That's encouraging. We saw cash hog market trade higher yesterday, contract highs in October hogs. We may not be done yet with those hog contracts. We may continue to push October higher. It's still discount to the lean hog index and the cash markets, and it's going to narrow that spread. Now, the cutouts were down. That could hurt us a little bit here initially, but longer term, we're going to look for continued strength in that hog contract. Now, the cattle are a little bit different story. Cutouts were down. Cash traded a little bit softer yesterday compared to what we saw on Tuesday. We saw some dress trade about $5 lower Tuesday. It was softer by another $3 on Wednesday, but it's just a handful of trade and not a large amount and nothing in the South yet. So we're still looking for that trade to develop. The cutouts were lower again yesterday. The feeder cattle index is probably going to start to come down a little bit here. And all this puts a lot of bearish fundamental momentum against the marketplace. So we may have another day of selling, but really what we need to see is, cash markets stabilize or move higher. It may not be this week. It may not be next week, but we do have a cattle on feed report coming out a week from Friday. And that report looks to be very bullish as it'll really highlight our tight supplies and tight placements in the feedlots.
Yeah, good points. Brian Hoops, President, Midwest Market Solutions.